And one last thing, this is just a reminder that today's webinar and Q&A section are solely for educational purposes only. So, all right, now that we got all the boring stuff out of the way, I'd like to officially introduce you to our keynote speaker, Jamie. She's worked at the credit union for over 25 years and has spent over 10 years in the financial wellness department. She is a certified credit union financial counselor, manager of the financial wellness team, and says that her favorite part of the job is hearing from members who are excited to share that they met their financial goals, because that's when she knows she's made an impact in their lives. Jamie, I'll check in with you later, but for now, the floor is all yours.
All right. Thank you so much, Sutton. Really excited to be here with you all today. Thank you for joining us. On today's agenda, we're going to be defining what financial wellness is, and I'm sure you're aware it kind of mean different things to different people. We'll see how the CFPB defines it. We'll talk about some current statistics on kind of the overall financial health of Americans. We'll go over some financial goals by the decade, so kind of by the age group. We'll break it down to the things that you should be focusing on, dependent on your age. And then we'll give you some ideas of how we can help and some tools and resources for you. So before we jump in, I do want to do a quick survey. So you want to help me out with that?
Yeah, Jamie, I got it from here. So we just want to know, what does financial wellness mean to you? A, does it mean being wealthy? B, having no debt? C, being able to make ends meet? Or D, all the above? And just a reminder, we will not save these answers. You'll not be chastised for them. We're just solely trying to get a pulse of the room for our attendees today. So, Jamie, what does financial wellness mean to you?
Yeah, I think when I was younger, I used to think that it meant being wealthy, right? Being rich, having lots of money to do whatever I wanted. But as I've gotten older, to me, it just means feeling secure about my
Mhm.
finances, knowing that if a minor emergency were to come up, I can cover it and I don't have to stress about my finances. So that's really what it is to me. What about you? What do you think about, what do you think
Honestly, I
finance
think
is?
I totally agree that when I was younger, I was like, oh, if I'm just make so much money, I'm a millionaire, all my problems will be solved. And that's just not the case. And I'm not a millionaire, even though that'd be awesome.
Right.
But I think, yeah, like you said, just being secure and knowing that you can make ends meet is probably what financial wellness means to me. So, Sarah, what about you?
I agree with what both of you guys said, but in addition to like also understanding and being like financial literate,
Mhm.
because I think you can have money, but you could also not understand the finances and the expenses. So also being understanding your finances, if that makes sense.
Yeah,
But
definitely.
let's see what our attendees said. Looks like majority of the room said D, all of the above, and about three people said B, having no debt, and one person said A, being wealthy. So looks like they all about agreed with us. So
Good. Yeah, and sir, I think you made a great point that it's the education part of it too, right? Just having the knowledge to be able to make good decisions, which really goes into how CFPB defines financial wellness. They say that financial wellness is having the ability to cover current and future financial obligations. It's a state of feeling secure with your financial status and having the ability to make wise financial decisions. And so part of that, being able to make wise financial decisions, is that educational piece, right? Just being able to understand what it means and what you need to move forward. But even that definition can mean different things to different people. You'll see some people, or at least one person, thought that it meant being wealthy. And I used to feel that way too, that it just meant never having to worry about anything, being able to buy whatever I wanted. For some people, it's just being able to make ends meet, right? It doesn't have to do with how much money is in the bank, but just knowing that you can put food on the table for your family and keep a roof over your head. So there's really no right or wrong answer. Financial wellness is really about how you feel about your financial situation. Overall, I think it means not stressing about it, right? So let's kind of look at some statistics about how Americans are doing financially. Approximately 57% of Americans report living paycheck to paycheck. So feeling like they're just basically stretching from one paycheck to another, not really having any additional funds to put into savings. 4 out of 10 Americans who earn over $100,000 a year still report living paycheck to paycheck. So that initial statistic applies even to those who have a pretty healthy income. I remember when I was younger, $100,000 a year was pretty wealthy. Like you were doing really well if you made that amount of money. Now I don't think it's, maybe you're still doing well if you're making that amount of money, but maybe it's not what it used to be back then. So again, that 57% is across all income levels. So it's not, the point being that it's not just about how much money you make. Then we are looking at only 2 in 5 Americans would be able to pay for a $1,000 unexpected expense. And that refers to without having to use credit or, borrow money. So having at least $1,000 in savings, only 2 in 5 Americans are reporting that they have that and wouldn't have to stress about that $1,000 unexpected expense. So definitely some insecurity around savings. We see that. And then let's look at debt. If you've joined us on any of our recent webinars, this may look kind of familiar. It's something we talk about often because some of these numbers are pretty shocking. You'll see that the American consumer debt of all types is sitting at about $18 trillion. That's a lot of money. Average household debt of all types, that includes mortgages, education loans, everything, about $175,000. And the average household credit card debt is sitting at $10,563 on average. That's up from the previous years. We actually saw during the pandemic that number dropped pretty significantly. People were paying down debt pretty well. And then in the couple of years post that, we've started to see that number climb again. Gen X carries the most consumer debt of any other generation. And debt remains to be a leading cause of stress and divorce. So overall, again, just a lot of kind of uncertainty and not feeling very financially well. Our final statistic is the average credit score, which is about 715, which it actually isn't horrible, right? Considering those debt numbers, which can be a little scary. 715 is not bad. Actually, I'd say it's pretty good, but I think there's a couple factors that go into that. We saw, post or during the pandemic and for a little while after, there was the pause on student loan payments and people kind of got a reset. So some of those that had been previously in collection kind of got a do-over. So we saw credit scores increased for that. And then there have also been some recent changes around the way medical debt is reported on credit. And so we've seen a lot of those fall off, which has also helped boost some credit scores. We'll see what kind of other changes continue to take place and how those will affect credit scores. But right now, that's not looking too unhealthy at 715. So now before we jump into the, what to do at each stage, let's take one more poll to get a pulse of our room.
Yeah, so guys, we want to know what age group applies to you. A 20-something, B 30-something, C 40s, D 50, or E 60 and better. Just a reminder, we will not we will not save these answers or chastise you about any of them, just solely to get a pulse of the room to understand who we're talking to today. I'll say I'm a 20-something and I'm going to keep saying I'm a 20-something for the rest of my life. And I know Sarah's probably in the same boat as me as well.
Yes.
So.
Yes, I'm pushing closer to B, but I want to stay in that A bracket forever.
No, I say I kind of miss being 20-something, but at the same time, I made so many mistakes in those 20-something years. I learned a lot, kind of climbed my way out of it during my 30-something. So I'm actually pretty comfortable being a 40-something. I'm going to say it proudly.
I love that. All right, it looks like our polling is about to close, and some of us couldn't find our polling question answers, so that's fine, but a majority of our room chose E, 60 and better, followed by D, 50-something. So
Okay.
There you go, Jamie.
Sounds good. So we've got a little bit more a mature audience with us today, which is fantastic. One thing that I want to point out, because I am going to spend some time on kind of what you should be doing in the 20, 30, and 40 somethings. If you're reading through these and you're like, oh my gosh, I'm a 50 something or a 60 something, and I haven't even done what you're telling me a 20 something should have done. Don't worry, don't panic. It's never too late to start now, right? And so as some of you or the majority of you sound like you're maybe getting closer to retirement, or at least preparing for that, we'll definitely have some tips to help make sure that you're financially well going into that phase of life as well. So let's start with our 20 somethings. For those of you who, if we have any 20 somethings in the room, or maybe you have kids that are in their 20 somethings, for my fellow panelists here, this is kind of what you should be focusing on in these years, these younger years. First thing is learning to invest. I wish somebody had taught me that at a younger age. The younger you start, the more wealth you're going to build over time as you take advantage of compound interest and fluctuations in the market. Now is the time to really dive into that and start making some investments. Learn to budget. Again, if somebody would have told me that in my 20s, I probably would have avoided a lot of those mistakes that I made. Learning to budget now kind of helps set you up with good habits going into your later years when you're earning more money, and helps you learn to manage that so you're well prepared going forward. Start your 401k retirement savings plan if you can. Do not wait. When we're in our 20 somethings, we tend to not even be thinking about retirement. We think there's still plenty of time to plan for that. We're busy having fun with our money. We don't really understand the value of saving it now. But just like investing, the earlier you start, the better you're going to be later on in life. If you have student loans, now's the time to really focus on getting those paid off, not adding additional debt until you get those things paid off. So while you're younger, before you have families, before you take on mortgages and things like that, really focus on getting those education loans paid off if you have them. Build a good credit history. And I say that cautiously, one to two credit cards that you use very responsibly. So you're not maxing them out. You're making your payments on time, charge a little bit, pay it off every month. That's going to be the best way to build up that good credit history. And that's going to help you later down the road when you're ready to make larger purchases like homes. And then build an emergency fund. Again, if you start when you're young, before you have all the other obligations of home ownerships and families and all of that, you start building those good habits. And it sets you up for when life happens, right? We all know life is going to happen, going to have an unexpected car repair or medical bill or something like that. That emergency fund is going to help protect your investments. Also, again, when you're starting young, you're building good habits for later. A fully funded emergency fund should be about 3 to 6 months of your monthly income. And so keep in mind too, that as you earn more, as you get older, that's going to change. So you're going to want to revisit that every time you get a pay increase and make sure you're adjusting your emergency fund accordingly. Then we jump into our 30s. You want to save as much as possible in your retirement plan. So make sure you're setting up automatic deductions into your 401k or maxing out IRA contributions. Get yourself in that mindset of preparing, because again, the younger you start, the better it is for yourself. You won't have to worry about retirement and whether or not we're going to have Social Security later in life, right? You'll have protection on your own. If desired, this would be the best time to buy a house. If you haven't already done so at this point, most people in their 30s are getting married, settling down, having families, and it's time to kind of put down roots and figure out where you want to be. Build on your investment expertise. So if you've started in your 20s, just continue to do that. Diversify your investments so that maybe it's spread out amongst real estate, stock market, savings. You don't want to put all your eggs in one basket, as they say. Boost your job skills. So you're going to be heading into the period of time where you're making the most money. So this is the time that you're really getting that job experience, figuring out if you're on the right path to what you really want to do. Sometimes in our 20s, we're still figuring it out. We may have gotten our degree in one thing, join that job field and think, oh my goodness, what did I do? This isn't for me, right? So this is the time to really focus on what it is that you want to do going forward in life, and settling into those job skills. Then prepare your basic estate planning documents. This one's really, really important. I can't stress it enough, because a lot of times, especially in our 20s and 30s, we're not thinking about end of life and preparing for that, right? But like I said before, life happens, and death doesn't only come for old people. I hate to put that morbidly, but it happens, right? I actually have a friend who in her 30s. She's married, and her husband had just had a baby. He was 6 months old, and her husband had a massive heart attack and he passed away. He was the main breadwinner for the family. She did have a job, but she worked for herself. She was a family photographer. And so everything was in his name. The house was in his name, all of their savings accounts, everything. And he did not have life insurance either. He had been previously married and had children from a previous marriage. And so thus began a long legal battle over his assets because he did not have any sort of estate planning documents to say where he wanted his money to go. So 10 years later, she is still fighting some legal battles over property and stuff with his family. So it is never too early to start planning. If you have any sort of assets, protect those assets, protect your loved ones by having some estate planning documents. Again, never too early for that. Start an investment account. If you have children, you want to start the investment account for them for their educations. That may be an educational savings account or something else to help pay for their college. I know one of the things, I've got kids who are teenagers now. I've got a 14-year-old and a 17-year-old. So my 17-year-old is preparing for college. He'll be graduating. He's a senior this year in high school. And I wish I had started earlier. You know, I have a small amount of savings. It's not nearly going to be enough to pay for his college. It'll help, but I wish I had started sooner, you know, and had a better idea of what investment options were out there for us. So if you are in this age group, if you have young children, now's the time to start talking to some investment specialists to figure out what the best options are to secure that future for your teens and future college attendees. I think I'll pause there to see if we have questions. I know, there's a lot of information already given there. Do we have any questions from our audience yet?
No questions yet in the queue on my side. Anything on your side, Sutton?
No, I don't see. Yeah, I don't have any yet. So, Jamie, you're just obviously covering all your bases. No one has any questions yet.
All right. So, I mean, you guys being in your 20 somethings and maybe getting ready to head into 30s here soon, is there anything on those lists that you're like, oh my goodness, I need to get on top of that?
I think personally, I think Sutton too, we kind of discussed like setting up our 401ks and retirements. I
Mhm.
think with the help of TikTok and social media, we were talking about this earlier, like videos of people were kind of teaching or saying these things, how important compound interest is or starting
Mhm.
young. I think our generation's kind of good about setting those up now, and at least trying to invest a little by little each paycheck
Yeah.
into that. So definitely been investing more or learning about that stuff now
Yeah.
to invest.
Jamie, I'm wondering, I saw, so on the 20 slide, you mentioned investing, and like Sarah mentioned, through social media, I learned about things like Robinhood or Acorns, and that's how I started investing now because my parents are amazing, but they said do everything we didn't. So because I have no investing experience, that's what I'm using. But like for when you say investing in your 20s, what other advice or suggestions or services would you recommend? Or like you would recommend your son as he's about to graduate?
Yeah. So I think any of those apps make it so
Hmm.
easy, right?
Right.
And I'm not here to promote any specific app or anything like that.
Hmm.
But I would say, do your research, always read reviews to see, check what the fees are and
Right.
all of that kind of stuff. And then talk to a trusted advisor. Of course, we have our flagship financial group here at the credit union, and they'll talk to you with no obligation, no fee, just to get some ideas. So find somebody that you trust and that you can learn from. I think, the younger generation, in some ways, not everything, but when it comes to finances, have it a little bit easier than some of us older ones that we didn't have access to social
Right.
media and the influencers that are out there so openly talking about it.
Hmm.
I know when I grew up, it seems like talking about finances were still kind of taboo,
Oh yeah.
parents didn't really talk about it. So we were left to really figure it out on our own, and they didn't really teach it in school.
Mhm.
Um, But my kids now, I mean, they do have every year, there's at least a week that's spent on some sort of financial wellness, budgeting, that kind of thing. I think they could do more. There's definitely room to add, taxes and investing and things like that into the school programs. But I love that there is so much more education available for younger folks that just wasn't there for me and probably some of our um, more mature audience. So, yeah.
Yeah, we definitely got to learn from your generation's mistakes.
For sure. And trust me, we made lots of them. At least I did. I can speak for myself. All right. Any other questions pop up before I move on? Just make sure we didn't miss
Um,
anybody.
Somebody in the chat said, set up your 401k and strive to save it at the max. It helped me because if you don't have it, you don't miss it. Very true. Also, with the company matching, it's a win-win. Very true.
Absolutely. Yes.
I
And
do
then,
regret not starting earlier, though. I do remember, like being 18, being a freshman in college, and my professor was like, "Open your 401, your Roth IRA right now and start investing in S." And I regret not starting earlier. Another question somebody asked, who would you recommend to speak with for investing?
huh. So, great question. And we do have our, like I mentioned, the flagship financial group. They are great. There's some really wonderful representatives in there who are patient and willing to kind of talk you through some things. Again, they will meet with you with no obligation, and then you can decide if you want to, um, do business there or not. But I think that's probably a great place to start just because it's accessible to you, to all of our members. Um, and then other than that, I would just, anybody that you trust, that people that around you who seem to be doing well, ask them what they're doing. I think people who are doing it well are willing to talk about it. So that's where I would start. And kind of going back to that other comment, yes, I think, starting young, it's all about building the habit, right? I'm trying to instill that in my son now. He's working his first job. And right now I have him putting 50% of his paycheck into savings. And he doesn't quite get like, well, what am I saving for? And I'm like, well, it's long term, that this is investment for your future. And he's like, okay, but when do I get to spend it? And I'm like, later. So I'm just trying to get him to build that habit. And at some point, it's not going to be feasible for him to put away 50% of his paycheck, maybe, but right now he can. So we start that habit really young. And then it's that if you don't see it, you don't miss it. You get used to living with what you have. All right. So I will move on. Keep the questions coming. If we need to pause in between at another point, let me know. But otherwise, we'll have another opportunity for more questions at the end. So let's talk to those of us in our 40s. This is where I'm at. And so like, so kind of comfortably, I feel like I finally, when I hit my 40s, figured things out. I spent a lot of my 20s making some financial mistakes, had a lot of debt, spent my 30s paying for it and trying to dig my way out of it, struggling. And by the time I hit my 40s, I kind of felt like I'd figured it out and knew what I was doing. So hopefully a lot of you have found yourselves in the same place, but if not, then here's some things that you can start working on and creating goals for yourself. So the first point being max out your retirement savings if possible. At the very least, you should be contributing whatever your company will match. You want to take advantage of any matching for 401k that's out there. Don't leave money on the table. That is free money. And again, you kind of learn to live within your means. So if you set that up, set it and forget it. That's kind of the easiest way to start saving for retirement beyond, investing personally. So max out those retirement savings if possible. Consult with financial advisors if needed. Again, we have our flagship financial group for that. AA has their group through, is it Fidelity? So, you can reach out there as well. But reach out to those financial advisors if you have questions. That's what they're there for. Maintain adequate insurance and emergency savings. Insurance is really important. We think of, your homeowner's insurance, your auto insurance, life insurance. You definitely want to have those things in place, and you don't want to wait until you have health issues to have that, right? So make sure that you are reviewing what you have, that it is sufficient to cover your assets and your family should something happen. Again, the emergency savings, you're probably going to be making a lot more money in your 40s than you were in your 20s and 30s. So you'll want to revisit that emergency savings and make sure that you don't need to make some adjustments to increase it to whatever 3 to 6 months of your income is at that time. Review and or update estate planning documents. So if you had taken my advice and you started those documents when you were in your 20s or 30s, chances are your life has changed a bit since then. It may be that whoever you had as your beneficiary or your executor on your will may not be around anymore. You may have gone through a divorce or something has changed in your life. You've had additional children, you've purchased a home or moved or something like that. You'll want to review and update, if necessary, those estate planning documents. And then kind of the hard part, and I'm here, is talking to your aging parents about their finances. So those of us that are in our 40s, they call us the sandwich generation because most of us still have kids that are at home, as well as having those aging parents that may be moving in with us or that we're having to help, take care of financially. So it can be a tough conversation to have. I lost my mom about 2 years ago, and kind of opened our eyes to some things financially that were going on within my parents' household. And I had to have some tough conversations with my dad about having to prepare now for what his life was going to be like as a single person going forward. And also kind of preparing him for, if his health declined or if anything happened, what were his needs and did he have what he needed to take care of that? Or were me and my brother going to have to step in? And it's not necessarily an easy conversation to have, but it is really important because I can tell you that when somebody passes away, and if anybody's experienced this, you're not always in the right mind to deal with the finances, but you have to. You've got to face it. And it makes it a lot easier if you know what's going on. So talk to them about, gathering documentation, maybe creating a portfolio or a folder that has, their life insurance, their medical insurance, if they have any sort of afterlife plans as far as, whether they want to be cremated, do they have their plots and all of the things that are sometimes nobody really wants to talk about, but it helps to have. So with my dad, we've now put that portfolio, we know where it is. So when his time comes, we know exactly where to go to get the documents that we need and execute what he wants to have happen. So definitely time to have that conversation with your parents if you haven't already. That brings us to our 50s. This is usually your peak earning years. So the point in your life where you're earning more money than you have at any other point. You are likely with the job that you're going to be retiring with. And it's time to just ramp up the savings. You're preparing for retirement in the next 10 to 20 years. And so you want to be saving as much as possible to prepare for that. You'll want to estimate how much money you're going to need to live on after you leave work. So kind of figure out, at the time, what age do you want to retire? What is your financial situation going to look like? Are you still going to owe money on your mortgage, or will your mortgage be paid in full at that point? Do you need to buy one more car before you get to that point? Whatever it is, you want to start estimating how much money you're going to need to live on so that you can really make sure that your goals are matching and keeping up with that. This is time to focus on paying off all debts except your low rate mortgage. And I would say even your low rate mortgage, if you can afford to do that, right? But everything else first, making sure you're paying off the credit cards, you're paying off any personal loans, auto loans, things like that. And really preparing for the next phase of life where you don't necessarily have the income coming in and you are now living off of what you have saved. So getting all that debt paid off is going to make that much easier and less stressful for you. And, the mortgage, we say accept that because usually low rate mortgage, you can manage that. But ideally, you want to even have that paid off, right? Ideally, you go into retirement without any sort of debt over your head. In your 50s, you might consider buying a retirement or vacation home if that's in the plans for you. you've done really well with your financial planning, that might be something that you're able to do. And I mean, I don't know about you guys, but a vacation home in Mexico or somewhere else sounds pretty awesome, especially when it's so cold here like it is today, 22 degrees. I want to be somewhere warm. As I get older, I can't handle this cold like I used to. So it's a lot harder. But yeah, start considering that. If that's something that's in the plan for you, start seeing what that looks like and planning for that. Talk to your kids about, what you want to do with your home when you retire, the one that you're in now. You're going to stay there until you be moving. Maybe you'll be moving in with them. I don't know. So start thinking about that. What does that look like? You'll want to start to educate yourself about Social Security, your retirement savings plan, and long-term care costs. As we go into the senior age, our care tends to be more expensive. We have more medical issues, and so we have to be prepared for that, because even if you are reliant on something like Medicare or whatever, it's still expensive. As my dad is learning, it doesn't cover everything. It doesn't cover everything at 100%. And there's still a lot of out-of-pocket expense. And there's some other things, long-term care, that a little harder to plan for because we don't know what our future holds. But if you have family where you've experienced Alzheimer's or anything like that, you can probably understand that care can be very expensive. And so making sure that you have what you need, or at least understand what you may need at this point, it's all about planning. And then finally, of course, which encompasses all of what I've just talked about, it's starting to prepare for that next act, which is retirement. And that brings us into our 60s and beyond. And if I remember correctly, we had quite a few of our listeners today falling in this age group. And so at some point in your 60s, you're likely to start collecting your Social Security, cash in on those senior discounts. And I'll tell you what, my dad, he grayed really early. He grayed in his 40s. He went gray, and he would take advantage of like the senior menu, because people would automatically assume that he was older because of his silver hair. And he proudly took advantage of every discount that he could get if he could get away with it. And even now, he's in his 70s, but he has a hat that says, "Don't forget my senior discount," because he just wants to save anywhere he can. Take advantage of that and do it proudly. You've earned it at this point. I mentioned in the previous slide about long-term care. So this would be the age where you might look into purchasing long-term care insurance. And what that is it's an insurance that kicks in if you were to need like a long-term care facility, like an Alzheimer's facility or nursing care, something like that. This insurance would kick in and help pay for that. Now, it is not cheap. We looked at it for my mom before she passed to see if that was something that we could get. And for her, it was very expensive, but she had some medical issues that I think increased that cost. So if you can purchase it before you start to have medical issues, you may still be able to find it fairly affordably. And if not, then you'll want to look at earmarking a portion of savings for long-term care, whatever that looks like. I think none of us go into life thinking that we want to be burdens on our children, right? When we reach that senior senior age, we spend so much of our life taking care of our children. And I'm sure that, or at least I'd like to think that my children will be more than happy to take care of me at some point if I need them to, but I also don't want to be a burden on them. And so I want to make sure that I have the savings and or insurance that I'm going to need to take that burden off of them. And so I'm not putting that, responsibility on them if I don't need to. So look into that and or your savings to make sure that you have what you need. You'll want to educate yourself about Medicare and required minimum distributions for Social Security that started, I believe, at 72. Making sure again that whatever Medicare is available, that you have what you need to fill in the gaps, because again, it doesn't cover everything in most cases and can sometimes still be fairly expensive. So doing the research on that to make sure you're prepared is important. You want to get more strategic about charitable giving, which is always a good thing. I think I encourage people to, give charitably throughout if you have the ability to do that. But now may be a time that you either need to cut back, or you might be in a position that you've done so well with your finances that you're able to give more, or set up grants and things within your will to make sure that you're giving to the areas that you want to when that time comes. And finally, prepare yourself psychologically for the withdrawal and spend phase of life. This is often the most difficult part about retirement. I actually had an employee a few years ago who decided to retire. She'd worked for the credit union for many years and finally decided to kind of take that leap into retirement. And I remember she called about a month afterwards and was asking for her job back. Not because she hadn't prepared financially. She was prepared financially, but she was not prepared for the psychological part of here she had spent so many years budgeting her income and relying on a paycheck that was coming in, that she didn't know how to flip that switch to budgeting what she already had. There was now no more money coming in. She had to start spending what she had spent her life savings. And that can be a little bit jarring, a little bit shocking, and we talked about it. We said it's kind of like when you go skydiving, and you jump out of a plane and you have your parachute, you have that pack on and it's there and you've just got to pull the string and you're going to be safe and you're going to be fine, but it's still scary, right? It's still, your heart's going to race a little bit. And so, not only do you need to prepare yourself financially, but preparing yourself psychologically for that leap is so important, because it's scary. It's scary. We spend our whole life just chasing money and making more and more money, and then we get to that phase and it's that money's not coming in anymore. We've got to spend what we spent our life saving. All right, so our final poll question.
Yeah, I got it from here, Jamie. This is our third and final poll question. It is a short answer, so you can go ahead and type your answer in once it opens. We want to know, what is one action you plan to take for your financial wellness? Sarah, what do you think? What is one thing you've taken away from this presentation so far for your financial wellness?
That I need to learn how to budget more. Jamie said like creating those habits is good. And yeah, I need to like make sure like I can download all the apps that I, want or learn how to invest, but as long as I'm doing the things like habitually, doing the right habits, investing, I should do that. But what about
Yeah,
you,
I should
Sid?
say I'm good about putting my money away in my savings accounts every month, contributing to my 401k, but I don't have a budget. So that's where I'm need to be better about. So, but Jamie, thank you. You made great some awesome points today that and pointed out some obvious financial literacy bad points that I need to work on today. So,
Well, and and I'm sure, I know you've heard me say it before, but the budgeting is like the foundation for everything else.
right.
Your budget is your roadmap to reaching all of the other goals, to knowing how much you can invest, to know, if you need to pay off debt, how much you can put towards that, how much you can spend, right? We want to
Right.
have fun with our money and we want to be able to spend it, but how much can we spend without putting ourselves into debt or other trouble? So definitely, if you guys haven't done your budget, I'm going to tell you that's the first thing you need to do. And then for myself, I was actually reminded as I was talking through this presentation that one thing I do need to revisit are my estate planning and my will. Because the last time I did it, my mom was still with us and she's my executor. And so now that she's gone, I've got to kind of redo that. And so it's a good reminder for myself as well. That's an action that I need to take. Do we have any responses from our audience yet?
Yes, Sarah, do we have any responses yet?
Yeah, let's see. Somebody said pay off debts, speak with a financial advisor, a IRA, I have a 401k, set up a kids account, diversify my investments, pay off debt and save more, invest beyond 401k. Google Sheets has some great free templates for budgeting. Oh, that's good to know. me and Sutton will need to go
Yeah, I know. I'm
look
gonna
into that.
I'll have to look into that.
Putting money up for my kids and teaching them things I was taught or learned. Build a 3 to 6 month emergency fund. Budgeting and investing, and budgeting is the most important for me. So looks like some attendees can agree with us on the budgeting part. Sure.
Well, I love that. And I do encourage everybody, write down what that is that you just put in that poll, your goal, make that your goal to complete. Give yourself a timeline, because it's easy to say like, oh yeah, I need to do that. And then we go right back to our regular daily life. And, in 30 minutes, we've kind of forgotten it. So I encourage you all right now, write it down somewhere where you're going to see it and set that reminder for yourself. Maybe set a reminder on your calendar or something like that. To really take action on whatever it is that you just said, whether that is looking into investing, setting up planning documents, starting that budget. And I'll talk about it here in a few minutes, but we also have a team of financial counselors that can help you if you're just like, yeah, I know I need a budget, but I don't know where to begin. I can write down all my expenses, but then what? That's what we're here for. It is a completely free service. Take advantage of that. The group of counselors, I can tell you, they are amazing people. They are the most caring and best cheerleaders that just want to help you succeed. And so I'm very proud of our team. And it's amazing that the credit union offers that service for free. So take advantage of that. We're here to help you reach those goals, whatever it is. So again, I'll talk about a little bit more on how you can get a hold of us, but do reach out if you need to. But I'm so glad to see so many people putting something into action. Hopefully this seminar has been a good reminder of something that you need to take action on so that at whatever stage you are in your life, you can feel financially prepared, financially well. That's the goal. I'd like to use this quote by Susie Orman. A big part of financial freedom is having your heart and mind free from the worry about the what ifs in life. And to me, that kind of sums up financial wellness, right? When you don't have to worry about the what if I have an emergency and I have to go to the ER, can I afford that bill? What if I have to replace my tires or I have another major, car repair that's needed? What if my garbage disposal goes out or my dishwasher goes out? Those seem like little things, but they can cause a big amount of stress for people who are not financially prepared. So just to have your heart and mind free of those worries, to me, that is what financial wellness or financial freedom is all about. I mentioned that I would talk about our service with the financial wellness department and the counselors. We do have certified credit union counselors. They go through a training process, receive a certificate. So they are well prepared to help people through whatever financial situation they're going through. And it is a personal one-on-one appointment that will be tailored to whatever your financial goals are. Non-judgmental. We're just there to, again, help you, provide some accountability and some cheerleading to help get you where you want to be. They are experts in financial assistance for bruised credit situations. So if you've kind of made some mistakes in your past, like I did, and you're now trying to kind of climb your way out of that, they can help you come up with a plan to pay off debt and maybe repair your credit, boost your credit score. Again, they're going to provide that continuous accountability, support, and guidance. We also do these webinars throughout the year. So this month, you may have seen my face quite a bit if you've been on any of the other webinars. We did a little bit of a financial wellness blitz this month. So we like to provide the education as well as that one-on-one personalized service. You can schedule an appointment with a counselor by giving us a call at that number on your screen, the 833-FINWELL or 833-346-9355. Or you can give us an email. You send us over an email at financialwellness@aacreditunion.org. Either way, you'll get a hold of one of us. There will be a form for you to fill out. And then we'll schedule that appointment with one of our counselors right away. And there's usually not a long wait period, so we can get you in pretty quickly. Some additional tools and resources for you. Our website, which is financialwellness.aacreditunion.org. That's going to tell you a little bit more about what we do and give you the information on how to contact us again. If you prefer a more do-it-yourself approach, we have the Navigator, which is our online kind of learning platform. You can go on there, navigator.aacreditunion.org, sign in. It is a free service, and you can basically hunt for any financial wellness topic that you could possibly be interested in learning about, from how to prepare to buy a home, preparing for retirement, paying off student debt, any of that. You're going to find it there on the Navigator. We also have our online banking and app, which is great. There is a budget tool in there for those who want to have their budget integrated into their account. It'll actually pull information right from your account. It also, just the great thing about the app is that it allows you to keep track of all of your transactions and things to make sure that you're where you need to be. Great features in there. And then finally, we have our credit score and report feature so that you can monitor your credit, make sure that it is where you want it to be or need it to be. You not only get your credit score, but you can see your full TransUnion credit report, and that is also completely free. And I highly recommend that you should be checking your credit a minimum of 1 time per year, but honestly, I would do it more often than that. If you're keeping track of your score, at least that will kind of alert you if there's anything going on that needs your attention. I know for me, the app actually alerted me to some identity fraud that had happened. Somebody had opened up an account with Comcast Cable in Chicago. I've never lived in Chicago. I think I've flown through the airport once, but I've definitely never lived there. But I saw a dip in my credit score, which kind of alerted me like, hey, what's going on here? And pulled up my report, saw the collection with Comcast. Called them and got it taken care of and removed to get my credit score back in shape. So it's an amazing tool. Highly recommend that you are using that to keep track of your credit. That brings me to the end of my part of the presentation. I know you guys have a few things that you want to go over before we go back to questions.
Yeah, I will take over the presentation here, but it looks like there's some questions coming in the queue. We'll get to them shortly. I'm going to go over some announcements. So throw all of your questions in the queue now, so we can do some rapid fire towards the end. But most of our financial solutions, like financial wellness, require a basic membership with the credit union. So if you're not one yet, at least consider opening a share savings account. That way you get to know the benefits of being a credit union member. And when you use promo code BD4412, we'll credit your initial new member deposit of $6, so you have nothing to lose. Plus, once you're a member, you're always a member. That means even if you take another job opportunity outside the air transportation industry, you can retain your credit union benefits and continue working with Jamie, financial wellness team or counselor. Next here, if you scan that QR code there, it'll take you to our offers page, and I'll go over some offers that we're highlighting this quarter. You can start saving now with an emergency fund and earn $25 when you receive deposits into your account for 2 consecutive months, and you can earn up to $100 when you set up direct deposit with a new checking account. And whenever you sign up or enroll in online banking and set up a credit score goal, you're entered for a chance to win a $1,000 cash prize. Also, you can receive $500 cash back and no payment for 90 days when you refinance your student loans. Be sure to check out our websites at aacreditunion.org/offers for more details on these promotions. So I'm going to jump back here. If anyone wants to take down that information, I think some people were curious on meeting with the team, but somebody asked Jamie what savings you use for your son.
So I started out with just using the regular credit union savings, and that's what I've set up for him to save his own money for right now. However, we have an appointment with one of the financial advisors to set up an investment account for him here pretty soon. They want to get him investing in the market as soon as possible.
Very nice. Somebody said, what are the options where we can use the power of compounding interest?
Yeah, so compounding interest, anytime you're saving, you're using the power of compound interest, right? That what that is just when you're earning interest on the dividends that you've already paid. So, or that you've already earned, excuse me. So if you start out your savings with $100 and that first dividend payment brings your balance to $105, now you're going to be earning dividends on that $105. So that amount goes up. So anytime, whatever mechanism you use to save, whether it be a regular savings account or an investment account, a 401k, you're using the power of compound interest. I think you have more earning potential in that when you're working with investments as opposed to just a regular savings. But we do also have some really great options for share certificates, like our ladder certificate. Check our website for the most recent dividend rate on those. But there's lots of different options you can use to save and take advantage of compounding interest.
Next question, where do you go to start your estate planning?
That's a great question as well, and one that has lots of different options. So I would say you can go to the Flagship Financial Group. Sarah, it looks like she's sharing their page. They have some options, but any attorney can help you with that. You can even do it yourself. You can Google, free will or estate planning, and there's documents that you can get and then just have notarized and keep on hand yourself. So you don't even have to pay anybody for those. But you do have lots of options there. If you are with American, if you're an employee of American and you take advantage of the prepaid legal option through our benefits program, they also provide that as part of what you're already paying. So there's no additional cost to do your will. That's actually how I did mine, was through the prepaid legal plan.
Thank you. Let's see, any more questions in the queue that you see? Oh yeah, I was bringing
I
up
don't see any
this
other.
Flagship financial information. Lots of people were asking or wanting to meet with an advisor, but yeah, as you can see, you can call this 877 number to set up your complimentary consultation. I don't think they do estate planning, but I think they can help you at least guide you in the right area to get you started with that or any of your investments. I think somebody in the chat also asked if they have a minimum amount requirement, but I don't think that's I don't think you need a certain amount to meet with them.
That's my understanding as well.
Sarah, I don't think there's any other questions in the queue, so.
No more questions here. Alrighty, if there's no further questions, then I will wrap us up. Then thank you all again for joining us today. And if we didn't get to your question or if you have something more personal you'd like to discuss, we'd love to connect with you. Just let us know in the survey that you'd like a financial wellness or a credit union representative to reach out with you and we'll follow up next week. Also, don't forget to check out our event schedule at aacreditunion.org/events for details on next month's Shred events happening in Miami, Broken Arrow, and El Segundo, and right here in Fort Worth at our Skyview campus. And stay connected with us on our socials, follow us on our Instagram and X, and be sure to like and subscribe on Facebook and YouTube. Hit the bell for notifications so you never miss out on helpful financial tips and announcements on events and webinars. And we will upload this webinar to our YouTube channel sometime next week where you can watch that recording. On behalf of Jamie, Sutton, myself, and the entire credit union, we truly appreciate you tuning in. We wish you a fantastic rest of the week. Please stay warm, safe, safe and happy. Anything else y'all'd like to add? Sorry.
Thank you all for joining. It was a pleasure. We'll see you next time.